We are going to be looking at Trulieve, which is a cannabis stock. It is an alternative to the penny stock Plan 13, which I still think will do the best. And Trulieve is a really good company that doesn't come with that volatility, as well as it's just a really good company with great management and great earnings and things of those sorts. It's actually profitable. It's been profitable since 2017. So the upside for this company is 106%. Now, I know that may look very extremely bullish, but it really isn't, because not only is it set to grow a lot, but also because it's undervalued. So the fundamental price target is $100.26. The 52-week high is $26.50, and the average analyst price target is $32.74. And then I add all those up and divide it by 3 to get the average price target. For 1 year, we expect this company to reach $53.17, and currently it's trading at $25.75, which leaves us with an upside of 106%. And I think that can happen. And I'm going to show you why in this video. So make sure you subscribe and hit the like button if you haven't already. But how do I find this? Well, you can watch my previous videos on how I find this. But essentially, all I do is I get the projected 1 year market cap and divide it by the shares outstanding, which you'll learn how to calculate if you watch my previous video. So let's get into the actual stock review. So Trulieve, in my opinion, is more of a medical company than Plan 13. I'm just saying that because they focus a little bit more on that than entertainment, and so that's why I consider it that. So here's some pictures of the inside of stores, what they look like. The ticker symbol for this company is TCNNF. So the next slide we're going to go to is kind of to show you how undervalued this company is. So this company is not founded in 1940. I just got that so I can show you kind of the about page of it, so I remember to tell you that. But anyways, it's founded in 2015. They opened their first dispensary in 2016, and ever since 2017, they have been profitable. They have 3,950 employees, and they're headquartered in Florida, United States. They also do have a website. So it's trading at 67.8% below the estimate of its fair value. The earnings are forecasted to grow 37.49% per year. The earnings grew by 47.1% over the past year. This is a high growth company with high growth potential and great value. So, Trulieve Cannabis Corporation is the name of the company, the full name. And so it's up around 100% in the last 5 years. But compared to a lot of other companies that have the same growth potential and have been growing pretty well, and who I think are really good companies like Planet 13, that is really nothing, because Planet 13 is up around 400% in the last 5 years. So the 2016 financial performance for this company, that was the very first year it was public. It was the very first year they opened their very first the first dispensary for this company. And so yeah, it wasn't that good. The net profit margin was negative 2,200%, but that is not what worries me. Nothing about that worries me, okay? What really gets me really intrigued is to see how much they grow, because I expect that with a company that just started out. Now look how much they grew. This is just a massive growth performance. So the revenue is up around 12% the next year. The net income is up 197%, and the cost of revenue is down. Everything's up. That is amazing. And that's just the first year. That's after the first year. So I think that is really good. And you can tell they were really focusing on growing their revenue, as well as their net income just followed that and did pretty well. And so then we go to 2018. 2018 and 2019, they focused a little bit more on the net income part of things after they grew their revenue so much, which is really good for a company that's just starting. You want to reinvest a lot of money to grow the revenue, then eventually start making sure your earnings are really well. So you can see their profit margins up around 50%, 27% as for the profit margins. The net income up around 600%, and the revenue up 400%. Everything else is down. And then we go to their financial performance for 2019, a year ago, before all the craziness happened. And so everything is up again except the cost of revenue. And yes, they were focused on the net income again, which, that 2018 and 2019, them being focused and really trying to grow that net income a lot, paid off a really good amount because of 2020 with COVID-19 and things like that, as well as they made sure they had good cash on hand and all, like, a lot of cash. So that was important, and that was a really good thing. I love the management. That was a very smart decision. You can see that, because yes, when you're just starting out, a lot of things do go well if you have good management, but you can have the best management, but something will happen. There will be an obstacle. It's so good that they did that early on. So then you see Planet 13. In the same year, 2019, their net income is negative and their revenue is up massively, but the net income is negative, as well as that cost of revenue is up massively, and the net change in cash and cash on hand was down. And so Planet 13 is up 400%, 100% a result of that. And I think that is kind of crazy because this company is up 100%, yet all of this looks really well. And I think you just playing 13 just is more exciting, and they have that YouTuber hype. So then we go to the recommendation ratings, what people think of this company. You have the average price target at $32.74 and the highest at $41.29. Then it gives you a description of this. Also, link in the description to this so you can check it out yourself. So this is just extra things to look at for valuation purposes. You can see the market cap at around $2.8 billion. And you can see how volatile it is if you're investing in the company in some ratios. So that was a financials intro. And now we're going to go to the latest and the greatest news, which I think is just a really bullish thing. Not exactly a catalyst, but a really bullish thing. So this is a quick overview of the company before we really get into all those really juicy things. Oh, wait, let me go. I forgot. And So this is the greatest and the best news, the greatest and latest news for this company. Trulieve is on its way to hit the milestone. They opened up their 67th store. So they opened up their 67th store in there, and they were trying to hit 68 stores by the end of this year, 2020. And so they just did their 67th store, and this news was announced on November 3rd, 2020, so very recently. So that is really good. Their 67th retail location. Here's some inside pictures of what it looks like. It looks really good, but I mean, you can't compare it to Planet 13, but it looks really good, modern, sleek, and very comforting. I think that's really good design they have for their stores. So this company was founded in 2015. Here's some just quick facts about it. The first dispensary was opened in 2016. They have 3,950 employees. They're in 4 states: Florida, California, Massachusetts, Connecticut. They have 65 stores in Florida, California, and Connecticut. They have 1.8 million square foot of cultivation and square feet in cultivation in Florida alone, and they have been profitable since 2017. Now I want to see the meaning or the mission of the company. The company mission is to provide the highest level of cannabis products and customer experience through authentic and reciprocal relationships. I think that's really good. And if you're looking at 4M's to value company, that is very important. So the CEO, this is what we're going to look at first because the management can break a company. So that is why we have to look at the management. So the CEO is a woman. Her name is Kim Rivers. She has 15 years of experience. So she's really she has a really good experience. And if you look at the book How to Win Friends, not How to Win Friends and Influence People, gonna get confused. Rich Dad Poor Dad. Well, he said experience is worth more than actual money or being paid, especially when you're just starting out. And this company is kind of relatively still new, even though it's very successful. It's still kind of new, and so that's gonna pay off. And then also something I like about Planet 13 a lot is that the CEO has legal background as well as a lot of the management, and this CEO does as well. And she's also from Florida. And if you look at actual the best or the greatest investor, value investor of all time, Warren Buffett, he likes the circle of to have a great circle of competence. He thinks it's one of the most important things. And this CEO is in certainty. She is very much in her circle of competence. She is from Florida. She graduated from Florida, and this business is located in Florida. So she's dead in the circle in the middle of that circle of competence. Then we look at the other pieces of the management, which all pieces of the puzzle matter. And so we have 20 years of experience there, 20 years of experience here, 20 years right there, 10 years, 18 years. And what's so ironic is that one of the most important people, in my opinion, which is the general counsel who focuses on legal things and like that. Well, he has 25 years of broad legal experience with a background in corporate and tax law, both in-house and private practice. So I think that is really good to have that much experience from with your general counsel and your just management overall. I think that is a very bullish thing. And so next thing I want to look at is the revenue, what they're projecting. And remember, the revenue from 2018 to 2019 grew more than 100%. I believe at around 115%. So this is very much possible. And so in the year before that, from 2017 to 2018, it grew around 12,000%. So it's very much possible that they can reach this. And I'm going to actually kind of make sure that they'll do that because I'll be looking at some numbers later on in this presentation or this stock review. With that being said, make sure to subscribe if you haven't already. So they have 50% of the market in Florida. You can look at all these metrics, but they're not just going to be in Florida. They are starting to make acquisitions in Massachusetts, California, watch out, Planet 13, Connecticut, Pennsylvania, which is pending for Pennsylvania. And so that is a really good thing that they're expanding, because they do need to not just have all the market in Florida, but try to be well rounded and be like all over the place as more states get legalized for things like this. So this is the ticker symbol for the Canadian Stock Exchange. So you can also see some other very cool metrics about this company, which all their metrics are pretty much cool. So we also can see their cultivation and extraction. You can see how much they can produce annually. Also, see the retail. You can also see the retail sales, which they have 63 Florida retail locations, and targeting 68 stores, like I said, in U.S. by year end. Which we know now that this is 67. They have 67 locations, so they're continuing to grow in 2020 to maintain lead in Florida, which I think is important. You can also see where they're trying to develop that product, their private label, their product development, which I think is good, because the only thing I see with this company that I like better with Planet 13 is that they have those private product labels, and not private product labels, but they have their other brands that they can sell. So their customer retention rate was 76%, which is really high. It's really bullish. They have active patients visited around 2.8 times a month, with a basket average of $125 per visit, and the annual patient spend as of Q4 19 grew to 3,900, which is a pretty good increase of around $1,100 in just 1 year. And so not only is the company growing, the people who were patients before, maybe they were patients since 2016, they're spending more and more. And so the new patients will spend more and more and more as well. So if we times 2.8 times the average spend per visit, we get 350, and then we multiply that times 12 months, you get $4,200. So that's actually the most accurate one. So I don't know why they put 3,900. And so you can see some other metrics, but the cool metric is that they have a square foot run rate of $2,300 across 44 stores. And then you can see one more thing. They have approximately $7 million of forecasted average volume per location in 2020. So what we're going to do is a quick math. So we're going to do some quick math. We're going to multiply 7 million times their 67 stores we now know they have, which gives us $469 million in revenue expected, which is a little bit higher than their lowest end of expectations for this company, which is really good. I think that is really bullish thing. And then we also can see where this company is expanding, how they are at making acquisitions of some very good companies, and they're growing their market by going at making these acquisitions in different states, and I think that's a really good thing. And so we can also see that this is how much retail space they have as of like the end of the ninth month of this year, which I don't really know which one that is. I think that's like 2 months ago or 1 month ago. Yeah, we're in the 11th month, 2 months ago, sorry. So anyways, we multiply that times the average square foot run rate. So we're gonna enter that times $2,300, and we get $429 million. So this company, I really do expect to reach somewhere between $429 million. So do keep that in mind, that their lowest end target is probably not going to be correct. So here's some of their moats. They're just adding all their moats. They have the first mover advantage, which is what I love about Lordstown Motors a lot. They have the first cannabis dispensary in 19 of 29 of basically cities. So they have home delivery services. So that is really good. They started that in 2019, so that was even before COVID-19 things. And so once COVID-19 happened, it just helped everything. And so we can also see that their patient behavior, how it changed. And so basically it's just more pickup and delivery instead of walk-in. You can also see the baskets, which how much person spent was more, but the visits remained at the same pace. And then in June it dropped back down to $120, but visits were up to around 2.8 a month. So this is really good metrics. I think this company is a really good company. So last thing I want to just show you is maybe a picture of Kim Rivers, so you can see what the CEO actually looks like. And so you can also see the stock price, how it looks, how volatile it looks, and it's not that volatile. I think it's a really good company. It's posed or for a lot of success for this company. And so it's a really good company, and I see a lot of growth coming for this company. And so the primary exchange is not even in the United States though, which is kind of weird, but this company is a really good company, and I do see a lot of growth for this company. So thank you for watching. Make sure to subscribe if you haven't already, and comment down below if you found anything useful in this